They ain't see us coming till we hopped up on the stage. Now the fan base jumping like we dunking NBA. You gonna talk about the hood? Now I got something else to say. Intellectual convo, sprinkled with some game. This shit sounds serious. That ain't every day. Plus Peasy got them jokes. You know that nigga always playing. Who's the white boy? That's Nyce, yo. Homie a G. He from the hood, plus he speak like he got a degree. What's up with XL? The guard, he a battling beast. Supreme knowledge and equality to round up the team. 4 dudes from the dirt with our eyes on the goal. Took coal, applied pressure, and made it a diamond throne.
All right, y'all, welcome back. This is our segment of Seat at the Throne. It's me, Nyce and Chopper, and I have with us today 2 individuals that have been helping the community of Brockton, but they're to help anybody that actually needs the help. I have Jorge DosSantos here with us. George has been a loan officer for 19 years with Total Mortgage, and we also have Arthur DePina, a.k.a. the Credit Guy. Thank you guys for coming on.
Thank you for having us.
Thank you.
We're bringing these gentlemen on here today to inform people of a lot of information that could really benefit you. There's a lot of myths about credit. There's a lot of myths about buying a home. And we want people to learn from our podcast, right? It's not just us talking. We're trying to bring people on that actually help other people and can teach other people and benefit. So we sat down and we said, let's bring George and let's bring Arthur on together because credit and mortgages obviously go together. So we're here. I think we should probably start with Arthur first. And what I would like to ask you what got you so focused on credit?
Yeah, that's actually a good question. So over the last 2 decades, I've been working in the financial. Over the last 2 decades, I've been working in the financial sector, right? So I worked for Toyota Financial, I worked for banking, and one issue I've seen with everybody is credit. And unfortunately, when you work for a corporate job, you know, there's so much that you could help, right? There's so much you could do to help. And I was doing it basically behind the curtain. Like after work, I was helping people because I noticed, especially our community, we work, right? I've seen in the bank, they have this money, but they can't qualify for a mortgage with George, right? They can't get approved for a simple credit card or auto loan. I'm like, there's something wrong, right? Something wrong with the system. There's something wrong with the information in the community. So I took upon myself, just helping the community, helping myself because I found myself at one point where I lost my job, I lost my house, and literally I had to start from scratch right in 2008 where everybody was going through the recession there. So for me to get back into the community and help the community, I was like, you know what? I need to help my family. I need to make sure my family has the credit because that's where I understand the power of credit. It doesn't matter how much money you have in the bank, but if you don't have that 3-digit number, it's not where it needs to be for the bank, then you don't get approved for that loan for your family or that auto loan or restructuring your debt. At the end of the day, just be able to sleep, because you have a bad credit.
Right.
So that's where the birth of DePina Credit Solutions started.
And you also wrote a book called Unlocking Your Credit, right?
Yep. So in 2020, right, during COVID, where everybody was home, locked down, I was like, you know what? I've been talking about credit for so long, I might as well put it like a friendly guide where somebody could be sitting at home or at work during break time. They could grab the book and start learning the basics of credit. Because the thing with credit is that as much as it might seem so complex, it's not. If you understand the basics of it, if you sit down with somebody that knows, if you sit down with your loan officer, you could break it down in a matter. I'm sure George could break it down in 20, 30 minutes. And if you just apply the principle that we give you, you could qualify for that house or that loan or just have a sound credit.
So let's clear up a few myths when it comes to credit. Say something like people think oh, you need credit cards. Is there? I've been told. I'm not sure. You can answer it. I've been told that credit cards can actually hurt you if you use them the wrong way. Explain that.
Well, actually, you're right. If you use it the wrong way, because think about this. So your whole credit profile is your adulthood report card, right? How you deal with finance. So unfortunately, you have to have credit, right? It's a game. It's a system that we have to play. Unless if you're the type of person that have millions of dollars, everything that you're buying in cash. Mm-hmm. At the end of the day, if you go see George or you go to the bank, you need credit. You need to leverage it, right? So if you use the credit card wrong, yeah, it's going to get you in trouble. If you use anything wrong in life,
right,
it's probably going to get you in trouble. But the thing is, you have to understand how the algorithm of the credit score works. You know, without a revolving account, which is credit card, you're missing the big factors of your credit, right? Which is credit utilization.
Right.
You know, don't use more than 30%, etc. You got to play with the scoring algorithm. So credit card, you definitely need it. Mm-hmm. I understand you probably had an issue when you were younger, or there was an issue where oversight, or you couldn't afford it, you had financial issue, but right now you're in the position where you're preparing to buy that house or preparing to have a sound credit. You need to learn how to use it. You need to be more responsible about it. And I usually tell people, set up automatic payment. Don't use more than a certain percentage of your credit. Keep it under 30% and set it autopilot. Automatic payment will save your life.
Is there a time where you should pay your payment before the due? Like, I've been told there's, what is it, the closing date or something like that? Like, if you pay it before a certain time, the interest doesn't kick in or something like that?
Well, at the end of the day, if you,
or just paying the minimum is like not the best thing to do. You should
so that's
pay more?
actually a good question. Like, if you go to a loan officer right now, which we have one here, he's probably going to go into a lot, is that you want to keep your debt as low as possible at the end of the day, right? With a credit card, you want to keep the usage. I mean, right now, if you type on Google, how low can I keep my credit card, you know, to increase my credit score, it would say 30%. Keep your credit utilization to 30%. Because that's statistically speaking, once you keep the credit utilization to 30%, your likelihood of going default is slim to none, right? Yeah, you're a type of person that's responsible. You're a type of person that's responsible. You're a type of person that will pay that bill on time. But then that's like a neutral zone, right? But if you keep it as low as possible into that 10% or less category, that's where you see your score keeps going up, right? Obviously, you know, credit, like interest rate on a credit card is not something that you should worry too much about, right? Because at the end of the day, it's very minimal. You should be able to pay your bill in full if you can at the end of the month.
So if you charge, say you have a $1,500 credit card, you charged $400 on it that month. The best thing to do is pay that $400 that month.
So that automatically you're under 30%, right? So usually the rule of thumb is whatever credit card limit they give you, set your new limit, right? Divide it by 3. That should set you at that 30% range, right? So a $400 credit card, $1,500, keep it at $400, you're under 30%. You should be good. At the end of the month, if you can, just pay it off. You should be good. I mean, if you want to keep the usage, you know, a couple of, you know, $100 there, you know, it's definitely going to help your credit. But if you're in that phase where you're building up your credit, I don't want you to manipulate the scoring algorithm. I want you to pay it off, get in the habit of paying your bills in full at the end of the month.
So George, so we know that, you know, a lot of people out here, they want to purchase homes, and you know their main thing is getting their credit right. So when aside from having your credit right, what are some other things that that like people have to make sure that they have right before they come to you to get ready to purchase a home?
So there's two big pieces of the puzzle, right? It's credit and income. Credit determines which programs we could put you in, and then your income is going to determine how much of a house you can buy. Mm-hmm. So once you have those two things, everything else we can kind of piece together.
Okay.
Explain some of those programs to people.
So there's, first-time home buyers, there's grants, there's state grants, there's local city and town grants. It depends on what you qualify for. We have to look, sit down and look at it. I'm not a huge fan of the grants because they kind of hold your hand a little bit, and they kind of restrict on what you could spend. A lot of people say, oh, I want the Mass Dreams was a big one that it was around October, November. They just restricted so much, and my type of clientele, they need to go to the limit, right? They have a household of 3-4 people. Only one qualifies. The husband has bad credit. I know the husband's making $100,000 a year. I know the wife's making 60, but I can only use the 60. So on paper, she needs to max out, where any of those programs aren't going to let her max out. So unfortunately, we know they can cover the mortgage, no problem, but on paper, what does it look like? Because the husband has bad credit, he can't go on. They're making $160,000 a year. They can easily afford that mortgage payment, but on paper, I can only use the wife because she was responsible and fixed her credit.
It's funny you said that because I remember when I first came to you, we was looking to buy our first home, and I had went to a certain bank, and they had approved me for $300,000. I was like, what am I gonna buy with $300,000? Mind you, I was looking at 3 families, and I'm like, I don't know what I can buy for $300,000. And then and you had ran some numbers, and you was like, nah, you're good. It was look, you can afford double that, you know what I'm saying? And she can afford double that, and together. And I was just like, man, I wish that I had came to talk to you earlier, because it's a stressful situation. You're worried about if you're gonna be able to afford your house, and if you can come up with the money and all those things. So I just know when I came to you, I felt comfortable and at ease in the situation. But I know that there's different programs and different things. I know, in some situations you got to put down 20%. Some situations you got to put down 5%. And can you kind of give us a little background about that?
So my number one program is FHA, right? FHA is 3.5% down, whether you're buying a single, some condos, 2, 3, all the way to 4 unit. It's 3.5% down off your purchase price. They let us go down to 580 credit score. And they're going to allow us to max debt to income ratio, DTI. Everything's based on what you make to what you spend. They give us the most flexibility, and that's what I need, and that's what most of my business is. 3.5% down, and you're buying $600,000-700,000 house. It's FHA, so that's my go-to, because that's the most flexibility that we're going to have getting you a loan. Then you have conventional loans where, that's 3-5% down for first-time home buyers. You get a grant, you don't need anything down. And then when you get into investment properties, that's when you usually need 20-25% down, things like that. But first-time home buyer, we're either going FHA most likely, especially in this area, or, we're going one of the conventional programs.
So you said you need a
580 is as low as we can go. So
you need a 580 credit score. So if I'm somebody that my credit is shot, let's say, right? I got a 480. Let's say I got a few late payments from 5 years ago. What type of advice would you give me, Arthur, to kind of?
Well, it all depends. 5 years ago, the longest you have negative thing, it doesn't affect your score algorithm that much. It's usually that 2 to 3 year span, right? So normally, I look at your whole profile. If I'm working with a loan officer, they'll send me whatever report they pull. We'll be able to say, okay, do you have open credit cards? If you don't, can you open 102 in the next couple of months to boost it up? What about your spouse? Does she has good credit? Can you get added, piggyback a little bit from her credit, right? If you have credit card, can you pay down that utilization as low as possible to boost your credit? Was the late payment, say you had late payment within the last 2 to 3 years, is it habitual behavior? Can we call the lenders and see if they'll do a goodwill adjustment to remove in the next 30 to 60 days? There's a lot of factors, obviously, that we could use to get your score up. And one thing we look at, and usually if you're coming from a loan officer that really wants to help you, usually when George sent me client, he already tell the clients what they could do on their own, right? And then if it's something more complex, it comes to me,
Okay. So I just want to back up on the whole credit score thing, right? It's funny because I posted a video today about it. People are going to say, oh, 580, oh, I got that. let's not settle for minimum, right?
Yeah.
Because we've gotten to that habit where, oh, I qualify, I got 580, but not realizing someone with a 580 credit score is going to have a 7.5% rate. Someone with a 620 might have a 6.75. It could be a $200-300 difference a month just because you didn't spend the time a month, 2 months to fix your credit to get that lower rate. People say, oh, 100, 200, it's not that much. You times that by 5 years, it starts to add up.
Yeah, it
So
sure does.
I'm preaching now is like, let's not settle for less. Like,
Absolutely.
580 is the minimum, but let's set the bar. Let's say, nah, we want to go for 620. Because 620, 700, I mean, people with good credit score are getting good rates.
Yeah, even some programs, I mean, I know you're not big with those programs, but some programs that give you the grant, you got to have certain threshold.
Yep.
660, 680. You know, if you want that whole 15,000, whatever the grant is, you have to meet the threshold of the credit score. So obviously, if he's going to work his magic to get that loan approved, but he's going to tell you, listen, if you get your score up by 10 points, 20 points, or 40 points, it's going to change your life. You know, you'll be able to use that money somewhere else, probably pay, you know, your insurance or whatever the case is, you know?
So I know, earlier on, my wife had came to you. I know you do one-on-one sessions because, you know, my wife had came to you. So, like, can you kind of explain to the people, like, in those, like, kind of what you do in those one-on-one sessions?
For sure. So normally, like I said, if they're already seeing a loan officer already have like a raw data on them, right? So they usually bring that information, or they get the consent, they get sent to me, and then we set up an appointment, we come in, we review it, right? We put a game plan together for the next 4 to 6 months, you know? Is it credit card that you need to pay down? Well, you don't have credit. It's like, well, I've been going to everywhere to apply. I don't get approved. I have good relationship with certain lenders out there that we could get those credit building cards. Usually, I'll ask them, who's your credit union that you deal with? Credit union are very flexible on opening like secure credit, right? Those credit building accounts. And then if there's stuff that's been there, hanging there, like collection, charge off, late payment, we challenge that, we dispute that, and we work a plan for the next 4 to 6 months to get them to that score where George will be able to approve them for a better program, right? Or whatever banks they're working with. You know, I tell people, like, what we do, it's half of the battle, right? So they have to do their part as well, right? So we're going to give them recommendation, things that they need to do. And every 30-day, couple of weeks, we review, we see where they're at. If they're where there needs to be, they go back to their lender and they start the process, you know?
Sounds good.
George, I want to ask you, if somebody is to buy a home, right, would you recommend for them to have more than just a down payment in the savings? And if so,
100%.
why?
You guys have both bought homes, right?
Right. Well, I have my opinion, but I mean, you
So
you
we-
do this.
what-
You the
what-
expert.
No,
so
I'm
I
asking you
wanna-
because, so when you moved in, what happened? You looking around, you got an empty house.
Yeah, I'll tell you what
Where's
happened
the furniture
to me.
gonna come from? You know how many buyers call me like a week after closing? Man, the damn heating system went. That's $6, $7, $8 grand.
Yeah, easy.
There's a leak in the roof. There's this, there's that. Like owning a home, it's not like going to the dealership and
Can't
buying a
call
brand
that
new whip
landlord,
where
bro.
it's warranty and all that. Yeah, there's warranties you can buy in homes, but things break. You know what I mean? Things got to get fixed. There's maintenance that you got to. The rule of thumb is you want to have saved at least 1% of your purchase price a year to big ticket items. You have furniture. You're gonna want to decorate your house. Every spring, everybody wants to redo their yard. So you want to have a cushion. You don't want to wipe out everything just to buy a home. It just doesn't make sense.
Listen, I'm gonna tell the people out there, look, you better have some good credit cards. You better have a Home Depot or a Lowe's card, and you
Those
better
are clutch.
have a decent amount of cash put to the side, because when I bought my home, I ran them credit cards up.
Yeah, and that's the thing, right? So you definitely need that money, because you need that extra money than down payment, because if not, you're going to come right back to me. You're going to be like, Arthur, I opened those Home Depot credit card, now I can't afford it. But if you had that extra money, other than the down payment, now, yeah, you walk in, now the boiler break or whatever the case is. You need to buy furniture.
There's no calling the landlord. Hey,
Yeah.
something's
I'm trying to
broken.
tell you.
No,
I'm
you
telling
buy
you the
your own.
landlord.
Yeah,
Right.
yeah.
All the
And you
landlords.
definitely don't want to call homeowners insurance for every little thing.
No.
There you go. There you go. So you definitely have to have. I mean, talking about credit, you definitely need extra money, or else you're gonna fall back where you were before.
Right. Because I mean, I agree. It seems like obviously credit is important, right? But having just good credit and not being able to truly afford a home would be like ass backwards. Like, yeah, you can get approved for the loan maybe, but you don't really have any money. So if you purchase this home, would you consider it more of a liability or an asset that they're purchasing if they really don't have money?
It depends how they treat it. It could be both. It could be either one. On paper, I don't know that you'd like to take 4 vacations a year. On paper, I don't know you like name brand stuff that costs a lot of money. You know what I mean? So everybody's different. You got to know what works for you. The other thing we got to look at too is rent. If rent's, Brockton, some rents are $3,000. You know how many of my buyers mortgage on even $3,000?
Right.
People don't realize that. People think you own a home, you're gonna be paying way more than rent. Not these days.
Right. So when somebody comes to you to get a home, would you advise them to get single or multifamily for the first time? Which do you think is better? Because I've been told by
personally,
different people.
I'll always go with the multi, right? I always say go multi first. But you don't know, do you want to deal with tenants? You know what I mean? That's the problem. Like, if it's a single mom looking just to buy a home for her and her kids, go single family or condo. Don't go buy a multi because then you got to deal with tenants. If you're cool with dealing with tenants, that's where you make money. But a lot of people don't want to deal with tenants. If you work 40, 50, 60 hours a week, you may not have time to deal with tenants.
Is it true if you get a multi-family home first, you still can qualify for like a FHA loan to go get a single family?
In the right circumstances, yeah. But you could always use FHA 3.5% down, and then when you're ready to go buy your single family, you could do 3 to 5% down conventional.
Okay.
If you do it the other way around, if you buy your single first, then you go buy the multi, then you're talking to 20, 25% down. Mm-hmm. And we're talking, especially in this market, 150, 200 grand.
So if you have plans on owning a 2-family or 3-family, or you plan on owning multiple homes, let's say, definitely it would probably be in your best interest to go with the commercial property first.
The higher units, yeah.
Yeah.
Your max, if you want to own a 4-unit, then buy that first. That's what you want to start off with.
Yeah.
Unless you have cash. If you have a lot of money and you have, $200,000-$300,000 to play with, then do it however you want. But if you're trying to do minimum down, then you need to start with the higher units.
It's tough because the wife be putting pressure. Because the wife wants a dream home. She don't care about the multifamilies, the commercial properties. She wants the dream home. And I got so many friends. Oh, bro, listen. I lead in my household. That's why I got what I got. You know what I'm saying? Listen, if it was
I
up
got
to
a dope house. I don't know why y'all even leaving.
Nah, listen, you know what I mean? We got big plans. We got big plans. But like I got so many friends, like multiple friends that bought the single family first and like they regretted it. They was like, yo, I wish I would have bought the multifamily first because now it's like, depending on where you're buying, you got to come up with $100,000 to put down on the next property, and everybody just doesn't have $100,000 laying around,
So for the multifamily homes, are you more likely to get approved for more money if you're going for a multifamily? And if so, why is that?
So what happens is for each extra unit, we get to use a market rent. We get to use 75%. So I don't know if you're collecting $1,000 a unit, we're adding $750 on top of your income. So usually, like a lot of my customers come to me and like, oh, I don't know if I want a single, 2 or 3. I end up giving them 3 different pre-approvals. If I give them $300,000 for a single family, $70,000 to $80,000 more for a 2-family, and then another $70,000, $80,000 for a 3-family. So it's because we're using the rental income up front.
So the banks see though, because the banks see at least 2 of those floors, or if it's a 4, it's 3 of the floors as an extra income.
Yeah,
right?
each additional unit is going to give you anywhere from like $70,000 to $80,000 more in your pre-approval.
That's
why a lot
that's
of times
something that a lot of people don't know about.
Yeah, yep. So that's why a lot of times you see pre-approvals. If they want 2, 3, or 4, we're giving them multiple pre-approvals.
Yeah, see, that's something that people need to really take into consideration. Mm-hmm. So what I want to speak to you about equity. Explain like equity to people and how it can benefit you, or how if you pull it from your house, like, or if you refinance or something like that, like the pros and cons of utilizing your equity, but there's also that could be some cons that come with it too.
So that's what we're doing a lot of right now, right? So a lot of my customers who are buying multifamilies, commercial properties, they're using the equity in their current home to buy the next property. It gets tricky. Again, the financial literacy is the problem, right? If I say, hey, I can get you $100,000 now, most of my people are going to be like, oh, now they're thinking, oh, I can go get my new car, I can get this, I can take a vacation. The only time you want to tap into your equity, one, if your back's against the wall, you got to do what you got to do. If you're going to buy another property, if your kids are going to college and you just want to take care of it all, you know, one whop, and that way you can finance it over 30 years. So there's so many different ways.
So you can use equity for a plethora of things.
That's your money. You can
I didn't
use it
know
for whatever
that.
you
No,
want.
I really didn't know that. So I'm glad you broke.
Yeah.
I didn't know that. I thought like you had to use it for like specific things. So
Nope.
you can technically
do whatever you want with it.
Okay,
you
keep
want to
going.
go? I mean,
That's good to know.
A lot of our people take the money and go build houses in Cape Verde.
Oh, yeah.
You know what I mean? So
Right.
there's so many different ways you can use
That's
it.
dope.
The cons is you're going to go back to a 30-year unless you refinance a 25 or 20 or something like that. But 9 out of 10 times you're resetting the clock. So now you have another 30 years to pay it off. 9 out of 10 times your rate's going to go up. So again, you just got to look at it and see, in the right circumstances, it's ideal. If it's used right. If it's used wrong, it could set you into a hole.
So, all right, if you refinance, let's say you purchased a house with a 600 credit score, but you're going to refinance your home now, but now your credit score is a 770. Would you get a better rate on the refinance? Or
Depends on the market.
Okay,
Anybody
so
refinancing right now is getting a higher rate, right? Anyone who
right, because when
bought-
I purchased my home through you, I got a great rate. The market was high, but I got a great rate.
Yep.
So now it seems the market may have gotten a little better, but the rates went up.
Yep. So for you,
Why is that?
it's the market. I mean,
Is
they
it
set
because like the
rates.
banks aren't going to lose no matter what? Like, so when it seemed to me like when rates were low, but houses were high, so banks were winning off of, or I don't know if it was just banks, but it just seems like if banks were giving you that loan, we're making this money on this house, and if the market drops, we might not make the money on the house, but we're going to get you on the interest rate.
Yeah.
Is it
So-
something like that, or is it?
Not really right now. There was always a balance, right? There's always been a balance. High value, low rate, vice versa. Now we're dealing with both are high.
Oh, okay. So they're
Supply and
both high
demand
right
is the
now.
issue. Give you an example, city of Brockton averages, 80 to 90 home single families on the market. I think last time I checked it was 21. Multifamilies in the city of Brockton used to be like, 30, 40, sometimes 50. Last I checked was like 18. So,
Yeah.
but we have endless amount of buyers. We're doing, Saturdays, I'm doing 6, 7 pre-approvals.
Yeah.
These people are all going to go battle for one house. They posted today on Facebook, an agent had 57 offers on one property. The supply and demand. So
Great
now
for
the
y'all,
values going to keep going up. People aren't complaining about rates anymore because
They just
rent's
want
the
the
same.
house.
Rent's high.
Right.
So they rather
Be in a house.
be in a house.
That was my thing, man. When I got this single family first, and it was advised, you might want to get it. And my main thing was, I understand the multifamily, I understand the investment and things of that nature. I understand I'll get approved for more, but I was so sick of living with neighbors upstairs, downstairs, next door, and paying just a crazy rent. I said, fuck it. I just want peace.
Yep.
I would rather pay, the $2,400, $2,500 a month. If I'm going to pay that to be living somewhere where I have neighbors upstairs, downstairs, inside of me, and I can't fucking even turn my music on without someone knocking on my door or hearing people fighting and things, I'd rather just get a single family and pay that and live how I live, man.
So $2,500 a month. That's basically a 3-bedroom apartment in Brockton.
Absolutely.
You live in an apartment for 5 years. What do you have at the end of 5 years?
Yeah, you have nothing.
Absolutely nothing.
Absolutely.
Right. You have no equity that built up. You have nothing.
Nothing. People don't realize too, owning a home, you're paying interest, so your taxes change.
Yeah, my taxes went up, bro.
Your property taxes.
My property
What I'm
taxes
saying is
went
like your taxes you do with the IRS. So now you have something to write off. So now you're getting a bigger refund. So yeah, you might be paying $200-300 more a month because it's a mortgage versus rent. But think about it: 5 years, you're going to be sitting on $150,000-200,000 that you almost didn't have to work for. You was going to pay that in rent anyway. You was building somebody else's bank. Build your own.
Yeah.
So I got a question for you, Arthur. So, I know there's a few different ways to repair credit. But if you, I want to talk about trade lines.
Okay.
Right. So, I just kind of want to dig into a little bit. Like my daughter, when she was like 16, we started putting her on credit cards.
Okay.
So she can establish credit. The goal is when she gets a certain age, be able to purchase a home and all that type of stuff. So can you kind of break down trade lines for us what they are and how they can be effective with either establishing credit or repairing your credit?
So, authorized user, right?
Yep.
So, trade line is any account that gets added to that's in your account. But authorized user is one of like the most powerful tool that's hitting that nobody almost, especially in our community, they don't use it because one, you go to your mother right now and say, hey, add me to your CS credit card that you have from 1990. Your mom was like, are you crazy? I'm not gonna do that. You're gonna probably use it, a whole bunch of stuff. You do that to your uncle, whatever the case is. But it is by far one of the most powerful way to boost up your credit, right? Obviously, I tell people, use as a stepping stool, right? So you get added or you add your kids to it, right? And they're 17. I get this question a lot. How old should I add my kids, right? And usually I tell them, add them as young as you can, but it all depends with the bank, right? So like, for example, Discover will only allow you to add it after 13 years old or 14 years old. There's some other banks that will allow you to add them when they was just born, as long as they have a social security number, right? But again, you got to think about this. It has a good side and bad side. Now you open your kids for identity theft issue, right? Because now the information is public. Public information. So you got to be very, very careful when you do that. Perhaps what I tell people, block once they report it, the second, third month, block their credit file, right? So the information is not out there. But this is a tool that you add your kids like that when they're 18, you put them, say you have an LLC, you have a business, you put them on payroll, they can start, building income, and stuff like that. They already have credit. Now, they probably have 10, 20 years of credit that you had, right?
Yep.
That just goes to them. They could go to Bank of America, apply for a credit card. Most likely, they're going to get approved for $1,000, $2,000, $3,000 credit card, right? They could start getting business loan, There's so many things that you could do, but this is one tool that our communities don't use.
So I kind of feel like a lot of people don't use it. One, because they don't know, but number two, people feel like that if they put somebody as an authorized user on their credit card, that it's gonna hurt them. But they don't understand that as long as you don't have the physical card, it doesn't hurt the person that's using that. It doesn't hurt the person who has the credit card. If anything, the person that has the credit card can hurt your credit score.
Exactly, because if you don't pay on time, it's counterproductive. You got to think about why you're adding that person to that credit card. Your kids, right? You're trying to build their credit. Any history that you have on that credit card
goes
most likely will duplicate it into your kid's profile, right? From if you had several late payments in the past, it will go. American Express will not put the old history. What they'll do, they'll add you as a new account, right? From that day on. They will say that you be a member since when your father was a member, right? But the history itself, they're not going to grant you all those history. So what I'm saying is that if you're going to add your kid and you were late, like 4, 5, 7 times, all that history is going to go to your kid. So it's counterproductive what you're doing, right? It's going to hurt them. But in the essence, somebody will get access to your credit card and use it, unless if you give them the credit card. Unless if you give your kids the credit card for them to use. And that's the only way. They can't call and say, hey, I need a credit card, because that credit card is going to, if they even call, they get sent, it goes to you. There's authentication process that have to go through,
prime example to add in your kid, right? I had put my son on one of my cards years ago, and recently he went to go buy a car, went by himself, did it on his own.
There you
He
go.
came home with his credit report from the dealership. This son of a bitch had a 783.
Yeah.
Nice.
I'm like, I can't even get that high. Like, what the hell?
Nice.
But he's just piggybacking off of one of my cards that I just almost never use.
Yeah.
But
It's a
because
age,
I've
the
had that
age.
card for 9 years, it boosts the score right away.
Nice.
It's a part. That's why in my book I talk about credit. You got to learn how to leverage it, right? And in his case, his son's leveraging. Instead of him go co-sign for that auto loan, now he's gonna throw his DTI for his next big project that he's gonna be doing. There's so many other stuff. Then the kid might forget to pay that auto loan. Now both of them are in the issue
Yeah, it
with
could
credit.
be delinquency on both accounts.
Yeah.
I told him that was the most important thing I ever gave him in life.
Yeah, that
Besides
is,
life.
that's gold.
Right.
Is that credit score.
Absolutely.
Don't screw that up.
Absolutely.
And every parent should be doing that with their kids. You know, like that when they're 18, they're semi on their own when it comes to their finance, you know?
So I kind of got a question for both of y'all. So you had mentioned business credit, right?
Yeah.
So I want to know, how would I establish business credit? Because I know it's a little different from personal
Right.
credit. And then I want to know from you, what are some ways that I would be able to, let's say, leverage a property to establish a business? So let's say I get the credit here and then I want to go there. So
So your personal credit is your personal credit. It's more complex, to be honest. Your business credit is so easy to build; it's unbelievable, right? Your personal credit, you're dealing with 3 major credit bureaus, right? TransUnion, Experian, Equifax. Your business credit, you're also dealing with 3 major players, right? Which is also business, Experian Business, Equifax Business, and then you have the third one, which is Dun & Bradstreet, right? The Dunn's number, right? And most bank, I would say, they're like the biggest player in the industry. So I tell people, you have to make sure, you can't just say, I want to build my business. I want to, I'm selling, cookies at home, so I'm gonna create it. I'm gonna put an LLC, and then we're gonna go. You got to structure right. What do I mean structure right? Make sure you go to your Secretary of State, right? Register your business. Make sure that name is there. 2, go to irs.gov. Get your EIN number, right? Set up yourself on Google, right? Like right now, I should be able to find George, or you should be able to Google me right now, DePina Credit Solution. You should find me, right? You should put yourself on 411. You should not have your business address as your home address. That's a no-no. There's so many companies out there, you could get those virtual address, right?
That's what we have for ours.
Exactly. Get those virtual address. And, 411, or now they have something, list myself or something like that. Because you got to think about it. In order for you to be fundable, you got to be findable.
nice.
So
I
the
like
banks
that.
need to find you. If they can't find you,
You're a ghost.
yeah, you're a ghost. It's just like right now you go to George and to pull your credit and he can't find you.
Yeah.
It's like, what am I gonna do? You're a ghost. I can't find you. You don't exist. So you got to make sure your business is structured correctly. And honestly, avoid names like credit repair, for example. I'm in the credit. I don't put credit repair in my business, right? Avoid name like real estate. There's so many sectors you don't want to associate your business with, especially if you're looking to build your credit. Because, for example, right now, you name yourself, I don't know, DePina Real Estate, right? Company. I go to the bank. Instead of you getting approved for that $30,000 loan, but because the name you're associated with, you're down by like probably, now they're only going to approve you for $15,000 because the risk that you're in, right? Now they can't find you, or you're using, the Gmail account. I tell people, set up the website, like legit website. It's so cheap to do that, right? Don't have those Gmail business email, right? Set up a domain, get an email, pay for it. It's a cost of doing business. Set up your structure correctly. From there, go and start grabbing like those vendors account, those net account, like net 30, net 15. You know, my favorite actually that I usually tell all my clients to get is Uline, Granger. There's like Quills. You know, it's your typical like your staple online, right? Your Amazon online. But what they'll do, they'll report to like Dun & Bradstreet. They'll report to Experian and things like that. But you just have to remember it's a net 30 or whatever the net is.
Yeah.
And it's a calendar day, right? It's not your business day. So if they send you, you know, your bill today, you got to pay in the next 15, 30 days because your payback score, your credit score goes from for your business goes from 0 to 100, right? 80 is equivalent you having like a 760 or 800 credit score, right? And they only care about are you paying your bills on time? Is your business credit structured correctly? Do you have at least 5 vendors account? Do you have at least 1 or 2 store account, like those charge card, like your Staples and things like that? Do you have your cash account, which is your typical, you know, Chase, Amex, and things like that? If you structure correctly, within like 4 to 6 months or even less, you could be open for your business to get fund in so many ways. You know?
Yeah, I'm gonna need a one-on-one.
I was gonna say because he keeps talking like, yo,
Yeah, he
this
just
is-
got
that's a
deep.
lot of
I'm
shit,
definitely gonna need a
but it's
one-on-one.
definitely about being literate, like George brought it.
Yeah,
to
yeah,
earlier.
but-
you got to be literate with a lot of this stuff, man. This financial literacy and knowing like what to do, what not to do, what can hurt you. Being realistic about the time it can take to build these things, not pulling the trigger too fast. Like George said, you could pull the trigger at 580, but you might want to do it till 6 months down the road. You might have a 650. It makes a major difference. You know what I'm saying? I got a question for George.
You want me to answer his first?
Oh yeah, I'm sorry. Yeah, my fault.
So if you're looking to buy a house to live in and you want to do minimum down, forget about you have to do it on your personal credit. If you're looking to be, buy commercial property or business for property for the business, stuff like that, then you could look into buying it all into the business with the business credit and all that. But then you're talking, 20, 30% down.
Okay.
Through business.
Yeah, through
It's
the
gonna
business.
be-
Yeah,
Oh,
you
so
need
you
more
don't
money
business. You
down.
won't get a FHA or nothing like that, right? Okay,
Quick question. So,
it's good to know.
So let's say I wanted to leverage my house, right? There's usually, as far as my understanding, there might be more, but I only know of 2 ways: refinancing and HELOCs. Can you kind of dive into that?
So right now, that's the HELOC is what I'm telling everybody to do because when you do a HELOC, it's a second loan. People are like, oh,
Hold
I
on
want a
one
second
second.
loan.
HELOC is a home equity line of credit.
Credit, yep.
Okay.
So basically, a lot of people say, well, I don't want 2 loans. And I break it down. Like, if you have a 3% rate now on that $300,000 loan and you have a 7% on a $50,000 loan, your overall monthly payment's a lot less. If you do a straight out cash out refinance, then you're taking 7% on the whole thing, the $350. So take that second loan, the HELOC, as a second loan, and the way that works is just like a credit card. If you have, there's some banks that go to 100% of your equity. So let's say you're sitting on $200,000 equity. You open that account, the $200,000 literally sits there. If you don't touch it, there's little fees and things here and there. If you don't touch it, you don't have a pay on it. If you, let's say, you want to redo the plumbing in your house, that's going to be $25,000. You can go to the bank and, literally from that $200,000, write a check for $25,000, put it in your personal account. Then, following month, your bill comes and you're paying interest on that $25,000.
Just the $25,000.
Just the $25,000.
Okay.
And then usually what they do, they give you 7 years as a open draw. So you can take money, put money back for the first 7 years, and you're only paying interest. At the 7 years, whatever you owe, it becomes a regular loan and you start paying on it. So that's why I always tell people, if you know what you're doing with the money, a lot of people buy other properties. So because you're putting a big chunk down on the next property, obviously your mortgage payment is going to be less and you're collecting rental income. So if you're profiting, $400, $500, $600 on that property, for the first 5 years, don't take a profit. Dump it back into the loan, to set the HELOC. So even though it's interest only for the first 7 years, pay a little bit more towards the principal. So that way in 7 years, instead of owing them $200,000, you owe them 130, 140, 150. So now your regular loan is based off that amount, and then whatever you're pocketing from the multifamily or the investment property is your money.
Nice.
And the HELOC, you're not touching the first mortgage. So whatever rate you have on that first mortgage, that just stays.
Still in there.
Yep.
Nice.
And you're not resetting that clock. That's another big one.
Okay. All right. My question was, somebody comes to you, they have decent credit, they have a new job, but they've only been working there 6 months. Is that a go, or do they need a certain amount of work history?
Usually 6 months. We're always going to ask for a 2-year work history. Doesn't have to be the same job. Doesn't have to be, the same line of work. Anytime you change the line of work, there has to be an explanation, right? If you're a waiter and then you decided to go take a nursing course, and throughout nursing school you're bartending or whatever, the second you become a nurse and you go into the field, right away there's no waiting period, because we use a school as the 2-year work history to replace it. If you were a mechanic and you decided to go into plumbing, obviously you have to do some certificates and stuff like that. Again, we don't have to worry about the 2-year. We always want a 2-year work history, but you don't have to be at the same job for 2 years. Pay structure is the biggest thing for us. If you've always been working W-2, 40 hours a week, and now you went to straight commission, then you're waiting at least a year. So it all depends, but usually that's not a problem. Another big one is a lot of people come from third world countries and think they have to wait and stay here for 2 years before they can buy.
Yeah.
That's false, because as long as I can verify that where they worked in that third world country, even though they don't do taxes, as long as I can contact the job and they fill out a form saying, yep, they worked here the time, and they've been here in America for 6 months working, I could do that loan all day long.
That's jewels, man. See, our
I'm trying to
community,
tell
though,
you.
That's what I'm saying. Like, that's
Our
things that I didn't
community
even
don't
know
know,
about.
yeah.
I've had people
So
tell
many
me, oh,
loopholes,
you need
man.
at least 2 years at the same job. Banks don't like when you bounce around from jobs. So you just cleared up something that
So
is obviously
anytime there's
some
more
nonsense.
than 3 job changes in the last 2 years, we have to explain it. So if you change 3 times the last 2 years, we don't even have to explain it. We just got to show the paperwork. If you change 6 times, we have to make it make sense.
Yeah.
Through COVID, a lot of it started making sense because people started moving around a lot. You know what I mean? So every circumstance. That's why I love what I do. Every deal is different.
Absolutely. I got a question. So I wanna kind of back up just a little bit. So I know when I was trying to get my credit together, I know a few things that were taught to me was secure loans and secure credit cards to increase your credit score. Do you go by that rule of thumb, or?
That's actually, yeah. I mean, if you're new to credit, especially individual that just migrated here, that just got their social and things like that, secure credit, secure loan is the best way to build your credit.
Can you break that down, so just for the people that don't?
So secure credit card is a collateral, basically a collateral credit card that you're getting, right? Secure credit card. You put in X amount of dollar down, right? So if you put $300 down, your credit line is $300, right? You use it 4 to 6 months, whatever it is. So the banks will periodically look at the credit. Normally, they'll tell you within 12 months, 6 to 12 months, they could graduate you to unsecured credit card, right? But as long as you be making the payment, using responsible, under 30%, you're building your credit the same as somebody with unsecured credit card, right? Secure loan is the same thing. It's the amount of money that you put into a CD, they'll lock it for 12 months. They'll give you a loan equivalent to that amount, and then you pay every month for 12 months. You unlock the CD, but they're reporting it every month using your money as a collateral to build your credit. You're killing 2 birds with one stone. You're saving money, because especially if you're the type of person that like to spend money. So now you have that money saved, and then you're building your credit at the same time. And then normally I tell a client, go to like 2-3 different banks and do that. Drop like $300-$500 in each. I would rather you open $300-$500 secure credit card than instead of $150-$100, right? Because now you're gonna have more trade line, right? More accounts reporting into your credit, and your score algorithm is gonna be in your favor.
Yeah, I dealt with First Progress, and they held me down.
If you don't mind me asking, how much did it boost your score?
Over so for my first year, I think I want to say it boosted my score about 100 points. and then I paid more into it because you had to stay at that limit. I started out with like $200, and then I was like, nah, I need more credit. I'm trying to get this thing up because it was around the time we was trying to get the house. So I ended up increasing my limit to $1,500, and I just kept consistently making payments. I think I was at like, when I first started, I was like 480, and then I got to like 715 by the time I was like on my way to, like, I was like, all right, I don't really need to use this credit card anymore. And I started getting real credit card offers. You know, they was like coming in the mail, you know, and then I was nervous because I'm like, I don't know which one to use. Is this a good credit card? Which one should I use? You know,
so a lot of people, I say that, you know, tell them, hey, go do that. They're like, well, why am I going to
put your money
spend money? Why am I going to pay interest on my own money? If you go to the club on a Friday night, Saturday night, you do VIP, you're spending $500-$600. You wake up and regret the next morning. At least this way, you got good credit. You can go get anything you want.
Absolutely.
It opens a lot of doors. I mean, this is my go-to, especially with somebody with thin file. If George send me someone, they have a thin file, they can't get approved, and I'll see that they went to this store to try to apply, they didn't get approved. They went to this bank to try to apply, they didn't get approved. I'm like, stop doing it. You know, if you went to 2 banks, you didn't get approved, it's not the bank's fault. There's some underlying issue that we need to address, and it's probably you just have a thin file. Let's open. I don't recommend anybody to open retail credit cards, you know, those stores, $200, $300. I'd rather you use that money, open a secure credit card, because at the end of the day, like George said, it's your money that you're saving there. You're not going to regret it.
I did hear Macy's is almost like American Express, though. Is that true?
I mean, it depends the level.
I know Macy's just don't give them out, though. They be like, you want them? Like, look, man, stop playing with me. I just
Well, you
got
to think about it. I mean,
Macy's is hard.
if your credit...
you got to have good credit to get a Macy's one.
Home Depot's hard.
Yeah.
Oh, people,
Probably the hardest.
Home Depot.
Home Depot? Oh, yeah.
I got
They're
through
trying
Home
to get you
Depot.
for it,
Lowe's
too.
was like, no. Lowe's was like, no, but Home Depot I got through.
But listen to this. They're all under a bank, Citibank. You know, Citi's hard to get approved. Like, they just have different guideline, underwriting, and things like that. And a lot of banks, especially the big bank, like your Chase, your American Express, they're not just looking at your credit card, your credit, because they understand people can manipulate that a little bit. You know, if you want to get approved actually for credit and really good credit, start establishing a relationship with that bank. Go beyond, right? Especially when it comes to business, right? We're not talking about business credit right now, but if you want that loan, that business loan, start establishing, you know, a couple of accounts with them. I usually, like in the beginning when I opened my business account, my bank will call me and say, hey, we have this $5,000 loan that we're giving. You qualify for it. It's like, give it to me. I don't need it. Give it to me. I just leave it there. Now I'm establishing a relationship, different level of relationship with that bank, not just deposit account. Now I'm in the lending side, right? I just open the door there. So usually I tell clients, don't just open credit cards with these banks, open deposit accounts with them. And it's so easy to open account nowadays with these banks, right? Because there's different algorithm they use. And if you have relationship, instead of they're approving you for that $10,000 credit line, now they could approve you for $20,000 because they could see your transaction day to day.
Yeah, I know one of the things that was hurting me when I was younger was I was moving around a lot, and it was like I remember one time I had like applied for.
You sure it wasn't that Kate Jewel's credit card you never paid?
Hey, yo, it might have been because I definitely did something with Kate Jewelers. I ain't gonna lie.
We all did.
Yeah,
I was gonna say they approve everybody.
Everybody wanted some jewels, man. But like I know, like it was like it had. I remember reading something on my report, and it said something about like different addresses that I had. Like it was something like because you're not. They basically looked at it like you're not
consistent.
Yeah, you know, you bounce around too much. Like how can we trust somebody that you know doesn't have a consistent place? And
but you will notice, like for example, I'm glad you say that. Have you noticed when you apply for this big credit cards like Amex, you don't get approved right away? You're like, God, what did I do wrong? And you start panicking. Because what they doing manual underwriting, like what George is doing. They go in, they checking, Are you a type of person that bounce house to house? Are you type of person that employment to employment? Are you a type of person that have more than 5 inquiries? Now they have a rule in place called 524 rule. If you have more than 5 new account or 5 inquiry in 24 months period, automatic decline. They don't care if you're a 750 credit score. They declining you. They want that relation. They want stability. They want you, but they want to make sure that you're focused with them, right? So a lot of people, what they do, they come to me, I clean up some inquiries, and then they apply, they get approved, you know?
It's crazy because me personally, I hope they restructure the whole credit system, right? Because you could have somebody who just filed bankruptcy, right? 2-3 months later, come out the gates with a 700 credit score. And then you could have somebody who's never made a late payment but just max out all their credit cards. I'm sorry, I'm betting on that person that's never made a late payment.
Right.
But because they max out their credit card, they got a low score versus someone who just filed bankruptcy and walked away from all his debt.
Yeah.
It's wild.
It's definitely tricky, bro. Like, you
Lot
can
of
make
moving
all
parts.
these payments and your credit score grows a little bit. You miss one payment and it drops drastically.
60,
though. So,
70 points.
So like something minor,
miss a
though.
mortgage
It-
payment.
don't,
you
yeah,
miss a
12
mortgage
months.
payment.
Oh
is-
my goodness!
Yeah, that's
what
like,
I'm saying.
if you miss,
That's what smacked my credit, not the mortgage. I had gap insurance on a vehicle and it got totaled, and the gap never went through. And I had no idea. I'm thinking my car's paid, I'm good. Gap went through. All of a sudden, I go to check my credit like a few months down the road, and my shit dropped like 80 points or something. I'm like, what's going on?
The
And it
other
looked
one-
like all these missed payments on my car, and I was like, dude, I had gap insurance. My car got paid off. And they're like, nah, your gap never went through. You still owe $2,000. I'm like, what do you mean? I signed all these papers. And they were like, nah, your gap never went through. So it looks like you missed a bunch of car payments. And there was nothing I could do about it from what I was told.
No,
I know,
usually
there is,
can't.
there is.
You
I heard
can't
that
fight
shit.
it.
I talked to somebody that did credit repair, and they were like, bro, that ship sailed. Nothing you can
Here's
do about
another
it.
one, right?
What
Let's
the
say
fuck?
Macy's credit card, right? Let's say you went to Macy's, you went shopping, and you let the bill go a month or two, you paid, and you say, you know what, let me just pay it off. But because the cycle didn't close, they didn't hit you for the interest yet.
Yeah, $2.
Right? So the next month, you have a $5 bill.
Yeah.
You're not even thinking about it because you paid
And
off
it's
the
a
car
late
last
thing.
month.
Yeah. Right.
And you turn off the auto pay because you paid it off. That $5 will screw your credit up.
So I've been there, and you know what I did?
A lot of people.
I called the company up. I said, "Listen, the credit card was paid off.
Right.
I didn't see this. It was literally like
Interest charge,
$5.
yeah,
It was like
interest charge.
$5,
Yep.
and
I'll
they,
give y'all $10.
No, listen.
Just
look,
watch this,
I
bro.
paid it, and they took it right off my credit report. Next month, my credit score went back up 60
right.
points.
You
know
got to
what I'm
be. The thing with credit, well, a lot of people don't do it. They don't monitor it, right?
Yeah.
They wait until they go to George or they go to me. They're like,
To start
I
paying
gotta fix
attention.
my credit. I'm like, what's? Usually, I ask them, what's going on with your credit? Well, I don't know. I went to George. George told me my credit is bad. You know, or I went to buy a car. They told me I can't qualify because my credit is bad. I was like, when the last time you look at your credit? There's so many tools out there nowadays. It's crazy.
Right.
You could monitor your credit while you're sleeping, right? You could download Experian. My favorite one is Experian. You could download it for free on your phone. You could download Credit Karma. Don't worry about the score. You know, it has alerts. It has so many things.
Just to be able to monitor.
Yeah, credit, like, what is the other one? Capital One, Credit Wise, right?
Yeah.
Oh,
They
yeah.
give you free credit report, Credit Sesame.
Yeah.
There's so many. Right now, almost all your credit card will give you free score because they want you to keep logging into the app, right?
So you just named a bunch of different apps. So what are your go-tos? Like as far as the apps that you prefer to use, or
Well-
that you tell your clients.
We have a site that we use to look at all 3 credit score, credit report at one fit. But for client to monitor, Experian. Just download the Experian app, use it. They have so many features there. You can even do now, they have the Experian Boost, right?
Yep.
Where you can link your checking account, your whatever.
To like your
Whatever
utility bills
yeah,
and stuff
whatever
like
bill,
that. Yep.
they'll give you a boost. It's a really easy to use. My teenagers use it all the time, you know, helping clients with that. It's really, really easy. It gives you a FICO score, which is almost close to what George we'll be pulling. You got to understand there's two type of scoring model, right? There's your Vantage score that you see in Credit Karma. There's your FICO score where your dealership, your mortgage will use 90% of the lenders will use that, right? Within FICO, obviously, there's industry standard for the score, right? But the Credit Karma is your Vantage score. No banks is using it yet, right? Because it was newly adopted in 2006. But it gives you, like, if you have a Capital One account, no matter what score model you go, it's going to show there. So for monitoring purpose, you could use it. But the scoring is different.
Ignore it.
He said ignore it.
Credit Karma is a great tool. I mean, you could dispute anything.
I use it.
I know, I've done it, and I've got things removed off of my credit.
Just don't look at the score.
Yeah,
the score is not real yet.
It's not. It's not there yet. Well, like 10 years from now, because you got to understand, FICO has been, since 1950s, right? So all the banks have designed their infrastructure based on that score in order for them to sell that mortgage to like outsiders. So they're not gonna change it overnight because the whole United States credit infrastructure have to change in order for them to use that. That's how big it is.
Absolutely.
Well, before we wrap this up, I got one more question because you just brought up something. But you might be able to answer it, but I think it's more for George. When somebody gets a loan and the loan gets sold to another company, I've seen people kind of get worried. Oh, what did they do? What does that mean? What does that mean? Can you kind of clarify any misconception with that about how it's not really like it doesn't affect you? It's not. It's kind of just that's kind of what happens, right? You can sell the debt to somebody else.
So basically, total mortgage, right? We fund the loan, right? We close your loan, we fund it, and then we start collecting payments. At some point, Total Mortgage wants to stay in business, so they turn around and sell the servicing, or they'll sell the whole portfolio to a bigger bank or servicing company. So what they do is say, hey, they'll portfolio $100 million and sell it to, like Wells Fargo, let's say. Now, Wells Fargo is taking your loan on the exact terms that we set forward.
Right.
So whatever your rate is,
No funny money behind it.
nothing. And then a lot of times, things get lost in translation, right? In the mail, people don't get anything. So if they transfer your loan in May, your first payment is due in May, people freak out. Oh, my God, I didn't get the bill yet. Even if you make that payment late, for the first 60 days, they can't report you.
Oh, okay.
So anytime it is a transfer, there's a 60-day window where they can't report it late because we know, change of address, especially when you just buy a house. A lot of times, before you even make your first mortgage payment on that new house, it's already sold, depending on how quick we want to turn it over. Right. And that's how we just stay in business. It's a money game.
It's no funny business behind it. I was just saying,
just how they operate.
Clear that up, because I've had someone say something to me, oh, they sold something. I'm like, bro, there's no funny business, but I don't know enough about it, but I know that you know, because that's what you do. So,
and sometimes it'll happen 4 or 5 times. It happens a lot.
It can happen. Right.
It's like just a game. Loan. Student loan has different service.
You had to bring that up, did you?
I'm trying to tell you.
Student loan.
We'll save that for another day.
Yeah, that's another topic. But they get sold to different services.
Yeah, your debts get sold, bro, but it doesn't change what you're paying, the interest rate and things of that nature.
Everything stays the same.
It's just sold, bro.
It's just who you're paying your mortgage to.
Yeah, that's it.
The government is not there to collect money. They have to have different company pay them a fee and say, go collect it for us.
Yeah.
Okay, well, I thank you guys for coming on. George, if you want, the camera's right there. Let them know where they could contact you, even on social media, Total Mortgage, where you guys are based out of, where you have different offices set up, and then we'll get to Arthur right after that.
Yeah, so Jorge DosSantos, all social media platforms. We're in Brockton, Fall River, and Boston. GeorgiaMortgageGuy.com, spelled with a J, spelled with a G, end up the same place. And home ownership, it's something that a lot more people can have, but that first step people are afraid of. Just take the first step. Come sit down with me. Sit down with a loan officer. I don't care if it's me or somebody else. Take that first step, and that's it.
Yeah, thank you. Arthur, same thing for you, man. Let them know where they can find you on social media, and also for your book as well, where they can purchase that as well.
Yeah, for sure. Yeah, thank you for inviting us here today. Appreciate
thank you for coming on.
Yeah, so you can find me. I'm local. That's why they call me the Brockton Credit Guy. I'm here in Brockton on Belmont Street. I've been in the same address for the last 5 years. You can find me on social media, the Brockton Credit Guy. You could, for consultation, you could go to our website, DePinaCreditSolutions.com. You know, you can set up a free consultation. I mean, don't be embarrassed, you know, about your credit. Whatever situation that you had in the past, I'm a walking billboard, right?
Let's go.
And so I'll be able to kind of guide you if I can't help you. It's a team effort, you know. We'll be able to, as a community, be able to help you, guide you, put you where you need to be so you could be a homeowner, right? Yep. Or you could probably refinance or leverage, you know, your credit, building that generational wealth for your kids.
Hey, and where can they find your book, though?
Oh, Amazon. Yeah. Amazon. So you could definitely find the book on Amazon. So, or you could go to unlockingyourcredit.com. The book is there.
Yeah, go get the book. It's an easy read. He breaks it down, real simple. And it'll definitely, if you're looking to repair your credit, you know, build your credit, he breaks down a lot of the misconceptions and a lot of tools that you can use to build your credit. So definitely go get this on Amazon. All right,
George, you need to write a book next, bro. Because there'll be a lot about mortgages people don't know, man. I know people learned a lot of stuff tonight, man. Yeah. And I thank you guys for coming on.
Appreciate you.
I want to say thank you seriously, because without gentlemen like you guys, man, a lot of people from our communities wouldn't know what to do because they just don't have the information.
I was one of them.
A lot of information when you see in other communities, specifically like white communities that have money, they pass on this information to their children, and they make sure their children's children get it. And that's how they all stay able to keep wealth and make money and things of that nature. When you come from a poverty-stricken area, man, a lot of us just don't know anything. We just don't know. And with environment. And with men like you and women as well that come together and learn these things and are willing to pass on the information and help people, man, it's such a great thing. And you guys are undervalued. And this is why we brought you guys on, because we want to show our appreciation to you guys. And I think a lot of people really, for real, man. Yeah. I think a lot of people need to appreciate men like you and women like you guys that have opened up these doors and help people and dedicate time to helping people, man, and better their lives. So, you know, I just want to say thank you for that, man.
Appreciate it.
Absolutely. Thank you. I appreciate it.
Thank you for coming on, man.
No doubt.
Appreciate it, man.
And y'all know, we're up out of here, man. And a diamond is just a piece of charcoal that handles stress well. We out of here, man.
They ain't see us coming till we hopped up on the stage. Now the fan base jumping like we dunking NBA. Now I got something else to say. Intellectual convo, sprinkled with some game. That ain't every day. Plus Peasy got them jokes. You know that nigga always playing. That's nice, yo, homie a G. He from the hood, plus he speak like he got a degree. The guard, he a battling beast. Supreme knowledge and equality to round up the team. 4 dudes from the dirt with our eyes on the goal. Took coal, applied pressure, and made it a diamond throne.